So this is Finance Meets Real Estate. We meet here every Tuesday, 6:30 p.m. Eastern time. So we've got like some amazing guests, like August, whom I see here today. Hi, August. How are you? So and today we're gonna do networking, just a networking session. So just get to know each other, like present what everyone has to offer, what everyone is doing. If you wanna kind of pitch your product, I think that's okay as well. So just kind of like presenting what everyone is doing out there. So if you have any questions, also let me know. So okay, so let me start, and I'm also going to permit like screen sharing. So if you guys want to share your screen and just show us your company or what you're doing, I think that's great. That will be perfect. So let me start. So I'm just gonna give you just 1 second. Yeah, I'm just gonna start with, I guess, my own my own bio. So okay, so well, actually, let me just I don't know my bio. Okay, so my name is Stefan Cvetkov. So I'm founder of Realty Quant. So Realty Quant, so it's a data analytics company, an investment company in the real estate industry. So what do we do? So I do like market valuations. So I know with August, we've spoken with that. Actually, I know I have August is here on this call, so we've spoken on market valuations. So that is the concept there being, okay, having a measure of like how over, under, fairly valued different markets, real estate markets are. And also we're releasing other products actually. So so it's kind of like a prop tech, kind of moving more towards prop tech. So I've been working on like releasing like financial modeling for commercial multifamily products and some condition scoring. So some machine learning kind of automated underwriting modules for that. So that's what I do. I'm also an investor I live in New York, and I invest in the New York City metro area. I do condominium conversions. So that's what I do as an investor, and I do data-driven investing. So data-driven investing is kind of like pooling like thousands of on-market, off-market listings, and kind of like attempting to underwrite them on various strategies and kind of attempting to invest this way. So, and I've been switching more towards the commercial space, and I've been looking for properties in the Midwest in case any of you is doing that. So kind of like commercial multifamily value add in the Midwest. So that's about myself. So yes, and yeah, so this is my company, realtyquant.com, and we can go on like if you guys want to introduce yourself, I guess in a similar way or better way, you can do that. Right. So like I mentioned, so one thing one product we currently have is market valuations. So market valuations is basically just one moment. It's basically for every single, okay, I'm not going to show you, for every single state and county and MSA in the US, having a measure of like what downside risk it may have in a recession, post a recession. So like what percentage is over, under, fairly valued. So these kind of studies are done at a few places. It's also done by Moody's, but it's in-house. It's done by Bloomberg Economics, but it's also in-house. So that's something that we have. So if you guys want to do the same, I've permitted screen sharing. So actually you can do it. Yeah. So do you want, does anyone want to speak up, or want me to pick up someone from the crowd? Scott, how is it going? Good to see you here.
Hey, good to see you too, Stefan. Yeah, I wasn't really sure how this was go, so I didn't have anything too fancy prepared here, but I can introduce myself to everybody and just tell you about my background. And I do have a website, so I can just share that to give you a visual as I talk.
Feel free to share your screen, actually.
Okay, so, all right. Can you guys see that?
Yeah.
Okay, so long story short for me, I have been investing in real estate for the past 10 years, and I've done a little bit of everything. My bread and butter is single family house flips. I do a lot of those, but I've also done some short-term rentals, some long-term rentals, some new development, some hillside work. I got into commercial a couple of years back, so I've done a few medical and office deals. So I kind of have my hands in everything, but like I said, most of what I do is just regular single family house flips. And I was in corporate America for pretty much my entire adult life up until about a year ago. I left corporate America to pursue real estate full time. I just had built up enough cash flow and savings to have the confidence to do that. So kind of part of that transition out of corporate America for me was give me more time to focus on my real estate investments, and then also to focus on building out kind of a real estate education company. So that's what you see here. I did not expect to share this with you guys, so I'm not trying to sell you anything. But I offer coaching services, mentoring. I'm working on a real estate investing course right now. So I'm just trying to build up an online kind of personality around real estate. I have a YouTube channel as well, which I can show you guys that. If you're interested in anything real estate, then follow me on there. I've got my initial.
What's your YouTube channel? Yeah, yes, good. What's your YouTube channel?
It's Scott Edward.
Okay.
So if you follow me on there, you know, most of my YouTube content, initially my vision there was I'm trying to share that as well, just to give you guys a visual of what that's all about. I don't know, is it sharing that?
Yeah.
Is sharing my YouTube now?
Yeah.
Okay, cool.
Oh, you're doing great there, actually. That's awesome.
You know, so I got it, like I started wanting to do real estate tips, like here's how you flip a house, here's what you look for in a home inspection, that kind of thing. But I started doing more like headlines, like talking about some of the craziest houses that are for sale around the world, and just some really interesting real estate related headlines. But that's kind of my story. Is I've got this YouTube thing going on. I've got the coaching and education business that I'm trying to grow, and I'm still focused on real estate most of the time. But I joined, you know, I found myself with some extra downtime over the past couple of months, and that's why I went on to Meetup and how I found you. And I've loved what you put together. I think it's so fun to join your meetings and listen to these other investors, and they're offering so much good perspective from all around the country. And so I've enjoyed your meetings a lot, and now you know a little bit more about me. Nice to meet everybody here.
Oh, thanks a lot. And actually, so since you mentioned YouTube, actually, so what is your approach actually for growing like subscribers there? I'm sure a lot of our audience are wondering the same, including myself. So like,
yeah, sure. I mean, gosh, there's I could say a lot to that, but I think what I've learned about YouTube is what's most important above anything else is two metrics. One is the click-through rate, and then second is the average view duration, which means that the first thing YouTube's looking for how many people who look at your thumbnail will actually click on your video. So that's why you see me with all these goofy faces and all these big bold words and stuff, because the thumbnail and the title are extremely important, because that's what's going to get people to click on your video. And then beyond that, once they click on your video has to be good. So I try to keep my videos really, really kind of punchy and quick moving, and lots of cuts and lots of B-roll. And I'm all self-taught. I don't know anything about video production. So I'm constantly trying to improve every video. I've upgraded all my camera equipment, my microphone, my lighting. I've gotten better about all these goofy thumbnails. But like the gist of it is, you want people to click on your video, so you need to have a nice title and thumbnail. Once they click on it, it better be a good, engaging video, so people stick around. And then YouTube will push your video to more people. I've got quite a few videos with several 100,000 views, and without a doubt, those videos get a lot of views because because of what I put together in terms of like a very fast-paced, exciting video. Even if it's more boring story, I try to make it as interesting as possible. And I guess I've started to figure it out.
And so in terms of subscribes, let's say, are they all like drawn through like on YouTube organically, like through the videos, or do you draw some of them externally?
All through YouTube. Yeah,
All through YouTube. Okay.
I pretty much, I just started an Instagram actually a couple weeks ago, and a TikTok, but I don't have any experience with any of that other stuff. I just focus 100% on YouTube and mastering the algorithm, and I have fun with it. You know, it's kind of like the artsy side of me gets to come out in these things. Like, you know, I get to talk about, like, this is one of my most viral videos, just to give you guys an example. And yeah, I hope I'm not boring anybody, but this is the story of a property in California that was listed for $1 billion a few years back, and it ended up selling for $100,000 at auction. And I mean, you can just look at it and know why it went viral. It's probably a story that everyone wants to learn more about, you know? So you see that story and it's like, oh my gosh, I have to click on that and hear that, like, how did that happen? And then I deliver, because within the video, it's a true story. This is not clickbait. This really happened. The property was listed, this hilltop property was listed for $1 billion by luxury real estate broker Aaron Kerman, and it sold at auction a few years later for $100,000. So that's just, you know, there's 432 Park Avenue. This is a famous building in New York City that has $70+ million apartments in it. The architect is world renowned. So I just try to focus on topics that I think are interesting, and I'm obsessed with real estate. So I have fun with it because I get to, you know, my wife's sick of hearing me talk about real estate. So I get to do it here. And
where do you live, Scott?
Scottsdale.
Okay, got it. That's cool. It's been a great market there.
For sure. Yep. I've got a few house flips going on out here right now. And so I try to document those as well as as there's updates worth sharing here on my channel.
Can we ask questions?
Yeah, sure. Yeah.
So Scottsdale, like a lot of these Instagram real estate gurus are from the Arizona area. Are those known competitors to you, or would you say that they weigh more on the marketing and less on the actual deal flow?
Yeah, I don't look at anyone as a competitor because there's plenty of deals to go around. But I do know some of those gurus from Arizona that you're referencing, and it's kind of ironic that I have created this little education business that you're looking at here on my website, because I actually kind of despise a lot of those gurus who are trying to sell courses on here's how you can get into wholesaling, or here's how you can get into sub-2 financing and things like that. So I don't look at those people as competitors in the education side or in the real estate investing side, because what I'm doing is very unique. Like, I'm not trying to flip 100 houses a year. I'm trying to flip a couple houses a year. Like, the style of properties that I do are very, I feel like, tasteful and unique. And I kind of choose a different finish palette than what the average people would. Like, if you look at some of my before and afters, I don't even know how to navigate around here. Oh, here we go. Like, just some, like, I painted this house black. People thought I was crazy for doing that, but I'm just doing some, you know, some really unique, more kind of outside the box, more tasteful designs. And so I don't feel like I'm competing with a lot of the other cookie cutter house flippers in town. And I'm proud of what I do. And, like, you know, I'm not trying to be the next Grant Cardone or anything. I'm just, you know, kind of like staying in my own lane. And so there's room for all of us to make money in this.
Great. Thanks so much, Scott. Really
yeah, may I
stuff.
ask you questions, Scott?
I mean, Scott, you seem to be like a boutique shop, I guess.
Hello?
Yeah. Yeah, sure. Hi.
Yeah.
Hi,
So
Alice.
I have a question. So first question is, I live in Arizona for a couple of months. I mean, Scottsdale for a couple of months, and the water is really bad. So how do you deal with that situation? Another question is, so you should have some person design your house, your property. You should find somebody design, right? Design your house. You can. Are you a professional designer, or so you should find somebody to design for your house, right?
Correct. Yes. So on the water topic, I'm not worried about it. Arizona's not running out of water. Some of the major news publications like to give those doom and gloom headlines, but we're going to be fine. On the design side of things, I learned pretty early on that I have a lot of fun picking finishes for these projects, but I like to leave it up to the professionals. And so I do hire a designer every time now, and I influence the direction of the project. So I'll tell them if I want to go with a more contemporary palette or more of a mid-century modern style, because I like to do a lot of homes that were built back in the 50s and 60s. But otherwise, I let them kind of go to town. And so I have a few designers that I really like that I work with, and I leave it to them. Same goes for the construction. I sub that out to a general contractor. I don't do any of that myself. I consider myself a developer. So I'm putting the team together. I'm not the designer or the contractor or the builder or the investor even. I put some of these deals I fund myself. Others I involve other parties.
How did you find the designer?
Through just networking, and I'm very well connected within the community. I've been doing this for 10 years, so I know every designer in town, every contractor in town, every top agent in town, all the architects, the staging companies. I've made a point to kind of get in front of all those people over the years and sort of like make a name for myself and establish a little bit of credibility and a brand with them. So I just latched onto a couple of them that I really liked. I have a really particular style. You can see this is not what a lot of people would do.
Yeah.
Some people might think this is weird, but I like it.
It's cool, really cool.
Yeah, with the wallpaper and stuff like that. It's just it's different, but it's like I have fun with it, and anyways, that's that.
Yeah, can you give me some kind of a resource about where to find a designer in New York? I live in New York.
I'm not sure. I
can hook you up, Alice. I know a couple of them.
Perfect.
Okay, cool. So can you type in the chat? Nicola, right? Can you type the?
Yeah, I'll do it now. I'll do it now while you guys can.
Okay.
Great. Well, Scott, thank you so much. Really great stuff. And let's talk more. Actually, if you want to put your email on the chat, actually, or your contact information, that's good as well.
Okay, I'll do that.
Cool. August, do you wanna share what you guys do? You're doing incredible stuff.
Absolutely. I just got to give you the accolades you deserve, Stefan, for creating what you've created through your meetup groups and your weekly events. It's been tremendous. Really, we learned a lot just from from all the expert guests you've brought on, and absolute pleasure and honor to have interviewed us. Your interview on our podcast, our YouTube show, will be available shortly. I was going to put the link to it, but we have a few podcasts and YouTube shows still in the bank waiting to be released, and yours is one of those. So will be released shortly here. And Scott, I was familiarized with Scott from seeing the video he did on the property in California that was I believe was listed for or the builder wanted to sell it for $500 million and then ended up selling at auction. But he narrated the video so professionally. I would have never guessed that he doesn't have a background in marketing or possibly even being on TV or what have you. It seemed like it was extremely professional. So so kind of kudos to you, man. You're making some awesome videos and very well. I watch a lot of videos just the space I'm in real estate, and it was very well shot and narrated and basically directed, if you may. August Biniaz with CPI Capital. I have a quick company overview I can just share with you guys briefly.
Absolutely. Go ahead.
Go over it quickly.
Yep.
Right here. Just let me know. Is that full screen?
Yeah.
Okay, perfect. Yeah. So CPI Capital is a real estate private equity firm that partners with passive investors as limited partners to acquire multifamily assets in the U.S. And what a real estate private equity firm really means is that is an investment firm that acquires real estate. Now, different investment firms have different mandates and different asset classes they focus on. Our firm focuses on multifamily institutional assets. So that means 200 plus doors, But when you call it private equity, it means that we raise capital from our investors. And private means that we're not raising capital from the public market like REITs do. We're raising capital from private investors. Just a bit, just what I just mentioned about us. And all the pictures you see are the assets that we've acquired so far. So yeah, just briefly goes over this concept of syndication. You might have heard this term syndication or syndicators. Basically syndication is a process of bringing a group together, investors and an operator. Operator in most cases means the real estate investor who finds the deal, underwrites the deal, then goes and finds the investors, puts it all together. That's really called the syndicator, and these specific projects are called syndications. Is differentiated from funds. Funds continuously raise capital, continuously acquire assets, as we have closed-end funds and open-ended funds, but syndications are one deal basis. This just goes over some other information about us and the regions we're in. We're focused on the Sunbelt regions because of the rent-to-value ratios that exist. We want to be able to yield cash flow for our investors, and projects really in California and New York, there is no surplus after you've paid your mortgage payment and you've done your debt service. There is no surplus, so it doesn't create that cash flow, which is very investors really seek to have cash flow and appreciation. That's why we're in the Sunbelt states, and I'm sure you guys are aware that a lot of people are moving out of California, New York into these states, lower cost of living states really. The value add model. Value add model is probably the greatest, one of the 8 wonders of the world, I like to call it. It's multifamily is really assessed by the income approach, unlike single family where it's assessed at the comparable approach. It's very difficult to have a single family in a neighborhood that every home is going for, let's say 300,000, and then you're saying, no, I want 600,000 for my home because I have a great tenant. It's very difficult to do that. In multifamily, what happens is assessed as your income. So whatever your net operating income is in relation to the prevailing cap rate, that neighborhood cap rate, that's what constitutes your assets price. So as long as you can increase your NOI, your net operating income, you can increase your assets value. So in the value add model, we buy these core or core plus and value add multifamily assets. We do some small renovations to the units that pushes up the NOI, and in turn it maximizes the assets value. And it really creates this exponential growth. These are some other properties that we've closed on. Goes over in Orlando, in Charleston, in Houston, a development project here. This is our team, some testimonials from our investors. And this is an investor dinner that we had. And that's it. That's basically about it. I'll put some more information about myself in the chat box, but yeah, I create a lot of content on LinkedIn. I'll also include my LinkedIn if you'd like to connect with me. And yeah, thanks everyone.
You have a LinkedIn newsletter, right, August? I'm on it.
That's right. That's right.
Right. Any other content sharing, besides your email list?
Yeah, just maybe I can take a step back and kind of explain why bother. Why should you create a lot of content? Great. That's kind of brand awareness. People know who August is, who Ava is, who CPI Capital is, and people who want to invest passively might connect with us. But also creating content allows for the SEO. So a lot of my newsletters that I create, I choose specific topics to write about. So when investors are on the internet and they're searching a certain topic, my newsletter comes up, they read the newsletter, and then that affirms that, hey, this guy knows what he's doing. Let me check out his company. So it kind of funnels potential investors to our firm or company. We speak on a lot of other people's platforms. We have our own YouTube show. So it's all creating a content, giving free information and adding value to investors. So if at some point in the future they want to invest in a firm like us, they would have seen us somewhere along their journey. So that's kind of a reasoning behind why we create so much content and so much educational information out there. And when you're creating educational content, a lot of time you have to go, I'm sure Scott is aware of this, a lot of time you have to go do your own research, and that research in itself educates you, so it expands your knowledge. So that's as far as the content.
You guys focus specifically on private equity, so deals that are even outside of many syndicators' price range, actually, because you literally compete in some cases with institutional investors, I presume. Is that fair to say, August?
Yeah, exactly. Our mandate from day one was to bring institutional assets for our investors. These are larger assets that historically pension funds, university endowments, other investment funds and groups invest into, just because the risk reward ratio is so stacked in their benefit. They produce cash flow and appreciation. So our mandate was definitely these institutional assets. It's just very difficult for a company to break into that space. So we utilize the co-syndication or the co-GP model, where a few different investment groups got together to be able to buy a $92 million asset, which was over a $30 million equity raise. So these syndicated investments allows for different groups to be involved and kind of to then share their responsibilities and in management and together. So yeah, definitely.
Absolutely. Yeah.
What's your path towards it, August? Sorry.
My personal path or the company's path towards it. My personal.
So you don't go from 0 to 30 million raise, right? Like what's the history there?
That's what we did, though. So when the company was founded, all of us were real estate professionals, all their leadership team, but the mandate was institutional. So it was really institutional asset is 200 plus doors, a multifamily assets that can have a third party property manager and be self-sufficient. And these larger assets allow for that. So the mandate was to acquire these types of properties, but obviously it's difficult to build your way up there. It takes a long time. And by the co-syndication model, we were able to achieve that. Now, on the personal side, my background is, I started in real estate 16 years ago as a real estate agent. I wasn't really good at being a broker, but I was good at finding deals. And I started doing small contracting company, then start building single family more on the luxury side. So I went through a journey. I always wanted to scale, my company and my business. And always wanted to do bigger deals, develop larger projects. And when I ventured into raising capital and learning about how to raise capital and this idea of syndication or real estate private equity, I realized a lot of groups were focused on already built assets rather than ground up development projects, because they're already revenue producing from day one. They're, most cases stable from day one. So that's when the kind of idea came to build a real estate private equity firm from the ground up. And that's when I connected with my partners and we founded a company together. But yeah, my journey personally has been in real estate for a long time.
And I guess to your point, August, like the co-GP or co-syndication model, so just for our, participants here is really, well, if you need to do a $30 million raise, you partner with, 2 other people or like 4 other companies or so forth, with between 5 of you, let's say, would be a $6 million raise. So that's like way more manageable. That gets you into the door for into the door in terms of institutional assets that are easier to manage, more quality assets and so forth. And so it's a great way in the real estate investing space. And
Yes.
It is from what I'm understanding from you. And all right, thank you so much. And actually, just so you're in Canada, right? You guys are in Vancouver still, right? I believe.
Exactly. Yeah, we're based out of Canada. We do however only acquire assets in the U.S. The rent to value ratios in Canada are just, the yields are just not here. So yeah, all the assets we acquire are in the U.S. We partner with both Canadian and U.S. LPs to acquire the assets. But one brief thing I wanted to kind of mention on the co-syndication model or the co-general partnership is very important that a lot of times people call this multifamily syndication business as a team sport, because really the business has 3 main components. One is the equity, so raising capital, connecting with investors. It's investor relations, creating that content, creating that brand, and continuously having investors contacting you. Another very important part of this business is the acquisition, scouting, the right properties, due diligence, underwriting, physical inspection. So basically acquisition part of the company. And the third part is really the execution. Is you've raised the equity needed, you bought the asset. Now you have to execute the business plan, which becomes asset management, any kind of renovations, and property management, overseeing the property manager. So as a partner, when you guys come together, you can see, where do you excel at? Are you good at raising capital? Is one partner great at sourcing deals and connecting with brokers. Is another partner great at managing properties, asset managing. So that's why different skill sets and different backgrounds can really create a perfect marriage for this business. And if you're lacking one of those sides of those business, you can always bring in a partner that is really good at that part of the company. So just want to touch on that. So
absolutely. Yeah. That's a great point right there. Thanks, August. That was awesome. Good having you here. Okay, Nicholas, do you want to go next? Yeah.
Yeah, sure. So hi, my name is Nicholas, or short Nick. My background is European. I've been in tech consulting for the past 10, 15 years, building technology startups for large corporations. So that was my bread and butter. Poured a lot of that money into real estate in the past 3 to 5 years in Belgium, in Europe, doing fix and flips. I can show.
Nicholas, just sorry to interrupt. So when you say building, in terms of for VC companies, so you were in venture capital essentially, or how exactly?
No, we were like a boutique building shop. So what we would do is they would hire us, and we would have the knowledge, just like you have the knowledge as a general contractor to build a house. But August isn't going to do it himself, and Scott isn't going to do it themselves. They would hire somebody. So they would hire us to build the startup for them. And so huge profit margins in that from a service point of view. But at one point it becomes very vague and intangible. And I had some relationships with real estate in the past, and so I poured my money into kind of these small multifamilies. I don't know if you guys can see my screen, but very similar as to US. Like you could have
just very curious, since you really I think there is an interesting parallel, usually between what August mentioned, like in commercial, the value add model in commercial, in real estate is sort of, it really exists in the rest of private equity, right? In a way, because you can take companies, and it's sort of like what Alex Hormozi does, if you know that guy.
I know the guy, definitely.
Right, and so forth. So it's sort of like you're buying a business, improving the profitability of that business, raising its valuation. And so that's kind of like it makes sense, the VC model, but in a way you don't want to gamble your funds on something. You want to kind of have a controllable way of improving the valuation that you understand, right? And so that's kind of like the model there. So, but you're saying what you guys had was actually interesting because it was kind of a service where you would actually build as a service and have like your profit margins on that. Did you actually take ownership in those companies as well?
Yes.
Yeah. Okay.
So, so the funny thing was that because it's a steep, like these are all, so the team that we assemble, you should imagine at the first phase aren't very specialized people, but they specialize in a lot of topics. So we call them MacGyvers. So they would be front-end and back-end engineers in one person. So very high cost per hour, but very, very capable. And often they need more than just that big hourly rate. They want some vision as well. And so imagine, let's take a look, example, the tech space that crossed over with what you do, data driven analysis. Zillow trying to perform what was now a failure, trying to perform like, hey, can we use AI to start buying properties and renovating them, and can we make this into a startup? And so that's the type of vision or idea that they would hire me for, and I would assemble a team of, let's say, 20 people, being able to run the first 18 to 24 months and put that into market. And as of that point on, because the price was so steep, they would ask like, oh, it's a very high cost to us. There's very little risk to you guys. Would you have skin in the game? And then we would say like, yeah, of course we can take 10 or 20% and reduce the rate. But once we offered that, they would always say no, because then obviously it dawned upon them that they would have a minority shareholder that's pretty big. And then obviously they say like, oh no, we'll fund it ourselves. So they always ask for us to convert rate into shares, but once we got a contract on the table, they would, like legal would say, no, the risk of actually having a second shareholder is bigger than the risk of losing the money if the concept doesn't pan out.
Right. So yeah, Nikos, I think we should connect after this actually.
Yeah, I'd love that.
I might
So
have some questions for you on that,
so I've got basically two objectives for this meeting. So so my goal is I moved to the US. My wife works at Microsoft, and I moved with her to kind of give her the opportunity, and always, like, I mean, it's New York, it's a lifelong dream of a lot of people, including mine. And so my goal now is to build a pipeline of fix and flips in New York, or perhaps fix and hold. My issue currently is that it's a new market to me. So I moved right in the midst of the pandemic and didn't have the balls to buy in the pandemic. And so now that things are settling down, I feel like you can estimate numbers again. And so I'm trying to build up a pipeline here as well. Kind of in this, like what you're seeing on your screen, like a 4-family, a 3.
Because
Sorry?
how long have you been in New York?
2 years and a half now, like
Okay,
3 months
cool.
before the pandemic. But like, I mean, we're high achievers, or I don't know what the latest term of that is. So in those 2.5 years, we achieved green card status already. So that allows us to get easier, like faster and better loans than any shorter visa system. So we arranged that, and so yeah, we're looking to stay at least another 10 years. So so yeah. And my second objective was actually to meet up with you, because before I actually noticed your website, and I love that you're taking a data-driven approach to it. I don't think it's the only holy grail. Like I always think that to the point of Scott, when you're seeing his properties, there should be this kind of artistic feel to it as well. It's not only the numbers, but I feel this is why I fell in love with real estate. It's a numbers game. I mean, August is like a financial guy, but at the same time, you can feel the brick, you can feel the wood, you can make a layout, you can see how people will be able to live in it. And so that's the part I was missing from my previous endeavors. That was very, very analytical only. And so I kind of fell in love with both. And so the property that you guys were looking at, so finding, like, this was all cubicle style building, like exposing it with these beams, and then deciding on, are we going to do a white finish on the beams? Are we going to let it like rain naturally? What is the light going to do with it? Like things like that just gives an extra dimension to it. And then coming from like, I think you can see it here, like coming from like a full gut renovation where you do all of the new plumbing, electrical wiring, new isolation, like everything brand new. It's kind of where I excel at, or what I love doing. I also like the process. I like meeting with all these hardworking people that are doing the actual work and heavy lifting for me. So this was actually a rare visit, because all of the properties that I renovated because of the pandemic were remotely. So I couldn't fly back home. And so I was forced, but took a lot of lessons from all of the out-of-state investors. And imagine if you can fly 6 hours from New York to, let's say, Arizona or New Mexico, you can fly 6 hours to Belgium in Europe. Like, it's the same distance. So why wouldn't the same knowledge be applicable to Europe, is kind of where I was going with my mind. And so I built this whole process for me to be able to manage them on a daily basis, and to be able to.
The property in the photo, so where is it located, you're saying?
This is all Europe. This is all Europe.
Right? Okay, that's in Belgium.
Yeah, you can
Belgium,
see
right?
it. Yeah. Yes, I am. Yes, I am. And so this is my biggest obstacle for Q2 was my biggest obstacle. Like there's a lot of stuff that's comparable and a lot of stuff that's new to me. Like very funny was when I was planning, I was almost in contract on a building in Washington Heights in right above Manhattan. And my contractor was proposing copper pipes. And I'm like, wait, like, why are we doing copper piping? Like, is this the 90s? Let's go for all of these flexible, like PVC, like stuff like that, that doesn't require a layout for plumbing. And he would look at me like, you want to go plastic? And I'm like, oh, damn, he's saying this with such a conviction. I must be missing something. And it's because of the rats in New York. The rats eat, so they never upgraded. For them, it's like, hey, copper is still better. And I'm like, whoa, but the expense of going copper is tremendously. So I would have never accounted for it. The same goes with like in Europe, almost every apartment is a tankless heater. Because they go up to 9-10 gallons per minute, endless warm water supply, it never runs out. And so in New York, every building that I'm at right now has this huge water boiler, this huge water tank. And so for me, it's interesting because obviously New York real estate is so expensive, and that could be an extra basement bedroom, or an extra entertainment room where you can actually sell the square footage rather than lose it to your plumbing. So so lots of learnings, and therefore I kind of took the realtor exam last month, and glad to say that I passed as well, just to catch up on the knowledge. Nothing to sell here, just sharing my story, and thankful to be connecting to you guys.
Yeah, that's great stuff. Thanks, Nicholas. And actually, do you want to put your email on the chat for others, or other way to connect if you like? Could be your website or something like that. And yeah, we should.
Yeah, like I said, no website. It's just me doing, like, let's say 2 or 3 properties here. But of course, I've like any young guy, I have hopes and dreams of skill and riches and all of those good things.
Right. So yes, that's my email. Actually, write to me. We should catch up for coffee sometime in Manhattan. Okay. Good hearing from you, Nicholas. And right. So who wants to go next? Perhaps Nelson? Yeah, go ahead.
Hey, Stefan. I haven't been here for a while, but it's great to see you. Great to see everyone else.
Great
Hearing the stories of Nicholas, Scott, and the other guy, the Canadian guy. I don't know where he's at now. Ovid. Okay. Yeah. My name is Nelson Zambrano. My background's a bit different. I was one of those guys who got recalled to active duty after 9/11. So I did a ton of deployments. I got, like I said, recalled. I had a civilian job, minding my own business. And actually, I was supposed to be at the World Trade Center on 9/11. It's just a fluke that I wasn't there that day. It's a pure fluke. But when I got a severance package, I bought a small multifamily property, deployed, came back. Didn't want to go back to financial services, bought another property. And then I would just deploy, come back, buy a property, deploy, come back, buy a property. And then I did a deal with a city of Fort Lauderdale, and I got them to use their resources as well. So that was interesting to have a joint venture partner as a city.
Right, and actually, just Nelson, sorry if I may interject, just for the other people. So it's actually Nelson gave a lecture here for this webinar in terms of like, which I think is a pretty unique topic in terms of the opportunities for like kind of partnering with different city programs, and kind of bringing them on your side for investment. So.
And Stefan, thank you. So that was, and I'd encourage people to listen to the podcast, but if you can get a city or any government agency, to me, I think the government is your friend. I'm not one of these people, I don't want the government. I always want them on my side. That's the bottom line. So if they're on your side, you've got the 800-pound gorilla, and that's all there is to it. So so I did that, And then I just kind of took a break because I was deploying a lot as well. So I've invested as an LP in syndications, 220 units in Nevada. And now I'm buying more short-term rentals. As a matter of fact, I'm in Puerto Rico as we speak. So, that's what I'm looking to do, is buy more short-term rentals in areas like Puerto Rico, Fort Lauderdale. And I actually, I wanted to use this as a bit of a time as kind of because I said we're going to talk about like the housing market and how we saw the economy going forward. Because one thing I'm looking for more is more resources to do that great research that Stefan does on the short-term rental market, as far as how recession is going to affect tourism and so forth. Because I'm in a niche within a niche. I remember the speaker, is it Lou? I call him Lou Reed, but it's not Gossens. He came, the Australian guy, and he talked about niches.
Reed Gossens?
Yeah, Reed Gossens. That's it.
Yeah,
and something that he says niche till it hurts. So be such a tight little niche that you dominate it, that you can control it.
Right.
So
That's
any and
how he
all.
started, yeah, for sure. Yeah. That's
say,
how he started.
Say again?
That's how he started.
Yeah.
And then
Mm-hmm.
Right.
Yeah. So that's my thing right now. I have, like I said, I'm developing the team here in Puerto Rico to buy more short-term rentals. Puerto Rico is definitely it's a part of the U.S., but sometimes they don't know that they're part of the U.S. Actually, they do. They're very patriotic.
Right. And
so
Nelson,
so that's that. Mm-hmm.
Yeah, sorry to interrupt. Did you connect with those guys? They were here as well from Cloud Castle, like the guys who are doing a startup in the short-term renting space. It's like an investment startup as well, but they're kind of using a lot of technology trying to buy like more short-term rentals. And they're doing some JV, and also they could potentially do syndication, but I believe they weren't doing that yet. Some JV and kind of like building out a short-term rental. I believe you were at that meeting. I'm not sure if you.
No.
Yeah.
No, I would have.
I spoke to them after that. So if you need any.
Yeah, please. Please do.
Sure.
Please do. Yeah, and I guess that's another reason why don't miss episodes. Don't miss podcasts. So yeah, but please do, Stefan, if you can do that. So I'm open to help folks out in South Florida. I do stuff in Latin America as well. I used to be with Lloyd's of London, and with them I used to handle kidnap and ransom insurance. So yes, that's a for real area. I used to handle kidnap and ransom insurance. So I would be all over Latin America as military and as a civilian, and as an investor now. So that's kind of it for me.
So what are your you said you're looking for in like Fort Lauderdale and also Puerto Rico in terms of I think I'm not sure if the picture kind of gets like there. Okay, so in terms of short-term rental, so you're working within the U.S. Let's say, is it only Florida? Because I know you live in Florida. So is that
well? Right now I'm in Puerto Rico. Right now I'm in Puerto Rico. So and I'm going to be in Puerto Rico for the foreseeable future. I'm actually Airbnb out my whole house, so I will be in Puerto Rico because I want to have a house to go back to. Mm-hmm.
You're not concerned with some of the Florida spike in valuations? If you need any.
Which part?
You're not concerned with like Florida spike in market valuation, I guess. Some of what Realty Quant does, actually, my company. I mean, I don't know. I know we've spoken about it before.
Yeah, I mean, well, first of all, I don't have the quant background. I'm more of a, I kind of do this. I kind of go in the general direction. You're very specific, and I admire that about you, and I'm trying to get some of those skill sets. I look at, it's like, I think it's Nicholas, the Canadian guy. Everybody is trying to escape from the cold. So Florida, it just immediately comes to mind.
Yeah.
So I have that as my friend. Mm-hmm.
Yeah.
And then the other part about it is Latin America. So I have a fair amount of Latin capital from Latin America, is that the governments in South America, and this is not a political statement, it's just the reality, they're going to the extreme left. Like, so there's a amount of fear. Whether they go Venezuela or not, I doubt it, but there is fear. And when there's fear, money moves. So there's money in Argentina that wants to move, Chile, Colombia, Mexico, and that money goes where? It goes to South Florida.
Right.
It doesn't go to the Midwest because the most Latin money in their minds, Miami, South Florida is an extension of South America.
Mhm.
So I have those two factors. I have, the cold bringing people down from up north, and I have some political turmoil making people say, I got to move some of my capital into US dollars, and the US dollars are called South Florida.
Got it. And I think you did some videos on that in terms of like attracting people from the Caribbean and other places to invest in the US,
Yeah.
if I'm right. How is your podcast doing?
Yeah. And as a matter of fact, but I'm just not, Stefan, you're the master at this. Scott, you definitely, you've got the, master at it as well, Scott Edwards. Yeah, so I have a podcast as well. It's called Investing in America.
Mhm.
So initially it started out in English, and now I'm doing more episodes in Spanish, and then I'm going to get subtitles out in English as well, or subtitles in Spanish. So those have helped me go more into the foreign market, and I use it as a great networking tool as well, because I'll put people together with people on the podcast, and that helps raise my profile. So for example, I just helped some investors from South America. They were doing something in the Baltimore area. It wasn't one of my deals, but I said, hey, look, I'll help you. So I helped them get out of that. And then I helped make it, I guess you could say it's going to be profitable. But now they're saying, hey, we want to do something else with you. And all our friends too. So that's where the podcast really comes in, where I don't have 26,000, viewers or anything like that. But I do use it as a credibility builder.
Got it. Okay.
Oh, and the other thing about just one thing about a podcast is obviously consistency is key, but I also use it for my own education. So if I don't have an appointment to do something, I generally won't do it. I'm, get kind of lazy. But if I have, let's say, an appointment with, let's say, Stefan, I have to get smart on whatever it is I'm going to talk about with Stefan, because I'm not going to look bad. Okay, so I will get smart on quantitative stuff, whatever it is I have to read up on. So I use it as a way to force myself to get smart on a topic so that I can have a real conversation with someone.
Mhm.
And then
It's a
whenever
great way,
possible, I
actually.
try to refer people to the guest,
Right.
to my,
Yeah, podcasting is a great way to just kind of strengthen your own education, actually, if hosting events, right? It's actually a great way. It's been for me, at least, I think. So, well, great. It was great seeing you, Nelson. So keep us
Well, same here,
posted how things
Stefan.
are going, and best of luck with the Airbnb actually over there, or like short-term rentals. I'm not sure if it's Airbnb only or other.
Yeah.
It's a great
there's
business, actually. I like it very much as well.
Yeah, it's good. And, in Puerto Rico, there's power outages. There's all kinds of stuff. As you can tell by my sweating right here, AC goes out. So, but again, the big concern is housing, recession, tourism, how this is going to play out. And I'm open to any and all thoughts. Right
well,
there.
okay, I don't like being very self-promotional on that, but Nelson, we've had these discussions before. I've actually done like studies of the past 3 recessions on a county level, like basically every geography in the US. And so we can speak on this later if you're concerned about like different places in Florida and so forth. Let's chat more, because I feel like relatively confident on downside risk in recession, predicting that.
Oh, and And by the way, it's not self-promotion if you actually know what the heck you're talking about, and you know what you're talking about.
Yeah,
You know,
well,
it's
thank
not,
you. Yeah.
and even if you're self-taught like Scott, guess what? You know, and the guy, the Canadian guy, one of my
Yes.
mentors is Canadian, so I keep on wanting to mention
Yes,
it.
brilliant. Yeah. Yeah, they're amazing, actually.
Yeah.
Right. Okay. Well.
Thank you,
Okay.
Stefan.
Let's talk more. Nelson. Okay. So Avery, go ahead.
Hi.
Thanks for your
Hi.
patience.
Oh yeah, no worries. My name is Avery. I'm with Leakaware. So Leakaware is kind of going off what everyone's saying about the multifamily properties. We are currently targeting the multifamily properties, mostly B and C class platforms. We're an all-in-one platform that we help the properties monitor their water usage in real time in order to catch leaks and fix leaks before the next costly bill cycle. And there's a lot of products on the market that do, in fact, they're tracking the leaks. But the issue, so our founder owned Wayner Multifamily. He sold that off to private equity about 3 years ago. So he kind of was in the industry wanting to really identify ways to save money. And so he identified that he was losing thousands of dollars on preventable water leaks. And so there were a lot of tracking water technologies that allowed to monitor the water usage. But the problem came with the maintenance staff, to where yes, a leak may be occurring, but if the staff isn't held accountable to fix a leak, then the issue is continuing to arise. So we have the hardware and the software aspect of monitoring the leak, and then tracking in an all-in-one platform, which allows for a workflow orientation, which is simple and intuitive. And there's like intelligent notifications that it immediately alerts the staff if there is a leak, and it can also predict leaks. So then if the maintenance staff isn't immediately fixing the leak, then it goes on to the property manager. And then if the property manager is like, okay, this is something that the owner needs to come into play, it goes into the owner's notification table. So it's really kind of like a tiered model within the notification tab. Sorry, I'm giving a quick overview. And then from there, whenever actually our crew will go through and install the water meter technology, which is tracking, we use Alert Labs, their hardware, to wrap it around the water meter. And our staff goes through and does a complete leak audit. We map out each unit to the different water meters to figure out within our tracking technology where the leak is actually coming from. So whenever they get an alert that there is a leak, they don't have to go walk every unit. They are able to identify based on which unit the water meter is connected to. It kind of narrows it down to maybe 25 units instead of 100 units if there's 4 meters on each property. And so from there, we train the on-site staff how to use the technology to really just maximize their savings, and it saves water as well within the industry. So that's kind of what we're doing. So really quick overview.
Great, thanks, Avery. And that's really valuable. It seems to me, right? That's like a great service. So, what is would you say that is your core technology that you guys are able to, that is helping you achieve, this kind of detecting, let's say, of leaks ahead of time? So that, because I know like water saving is like quite important to, let's say, commercial real estate investors, where they sometimes use it as a lever of value and being able to, improve the value of those properties. And
Right.
so, I think that's something that could help them there. So is it your hardware that you install that detects it? Is that the primary thing? And then the software is more of notifications and that aspect, or do you use also software for that?
So it's the hardware is we have an agreement with Alert Lab. So we use their hardware, which they refer to as a flowy, and we wrap that around each water meter. So we don't really do sub-metering yet. We're really just on those water meters at the B and C class properties. And so from there, it is attached to the water meter and it reads revolutions. So it can track every second, but the way that we have it to where it's not too overly notifying is if the water doesn't drop to 0 within a 10-hour period, then there's a water leak. It's been tested on millions of properties just to know. So from there, our actual software is the one that has the capability of doing the predictions and all the intelligent notifications, which creates the workflow orientation.
Got it. That's great.
Avery,
So,
Avery, I just noticed that Con Edison is replacing in our building everything with a digital meter. Are you expecting? Are you guys able to go and sell this to the water companies? And are you expecting that they'll go this route, like just from get-go?
Yeah, so there's a lot of so the reason why we target B and C class properties is because A class properties are those newer properties. A lot of them have the sub metering. And so our technology is more for the properties that don't want to pipe everything, and it's costly to get sub metering. So ours is targeted towards the older properties where there's leaks, you aren't able to identify them, some are completely underground. And so we actually do the leak audit for them rather than them having to fully re-sub meter and everything. It's really just in one centralized platform for them to identify with what they already have working for them, how to improve their savings and cost. So not necessarily the sub-metering aspect yet, but we are working with Alert Labs as they're advancing their technologies too.
Awesome.
great. Thanks, Avery. So if you want to put on the chat the best way to reach to you.
Okay, yeah, thank you.
Yeah, thank you. And okay, so we're a bit over time, but I'm not sure, Rick, did you want to join as well the conversation? Rick Ward. Yeah.
Hi there.
Hi. How's it going?
Trying to get my thing set up here. First of all, just thank you for doing this. And I try not to miss your meetings and your presentations. You always have interesting guests and your own information is good. So I learn a lot, and that's primarily why I'm here, just to learn. I will say I had formed a group, Brightline Investment Group, which I have a website, Brightline Investment Group, and that's for syndication. But I haven't done anything myself because I keep jumping on other people's deals. But the one thing I would like to mention, and I can't say much about it because this is still in process and I still have restrictions on what I can say, but I have just recently pulled the trigger to acquire an existing fund, a private equity fund, and it can fund anything, but primarily we're doing value add, some hotel conversions, things like that. It's very unique in the fact that it's not a blind pool. And so investors get to choose where they want their funds to go. They could put in 50,000 or 100,000 or whatever, and they can say, I want 10,000 sliced to go to this project, 20 to go to that. So that's very unique. And it's the present fund managers and owners, they have decided that they want to get back into just straight syndication themselves. And so we're going to continue working, but I am anxious to get this thing grown up and bigger and attracting more investors and more deals to it. So that'll be my next thing.
Do you want to show us your website perhaps, or yeah, if you want to share the screen, it's up to you.
I can't. Okay. I'm just on my cell phone, and frankly, and I'm going to be running out the door. I'm just waiting for my wife to get home. We have another we have to go onto a live. This will be my first live presentation in a while. But
awesome.
So I'll tell you briefly about my background, just to give some people, when they hear this, it gives them some interest. I've been in real estate development for 40 years. I started out with power plant development, which is probably one of the most difficult things you can imagine, especially in California, where I was based for 50 years in the Bay Area. And we were also doing projects in the Philippines and China. I personally was doing a lot of projects in India working with the sugar mills. So that's very interesting. Then I went to assisted living, where I personally was responsible for doing tax-exempt bond financing for 25 projects that our company actually developed and built and operated. That was totaling 2,000 units. And then I have been involved with automotive manufacturing, buses, for the last 20 years. officially I still do that, but I've done it so long, I only spend about an hour, between 1 and 5 hours a week on that, because I just do client relations and stuff at this point. So I am focusing onto I was on assisted living, and going to multifamily is so much more simple. The only thing I didn't realize is how difficult it would be to find, good projects. So I think that there's a lot of opportunities coming our way. They've already started, just with the interest rates rising and everything. So now is a good opportunity for people to get in there and seize some deals while we have a little window, because I don't think it'll last for that long. So
Right.
that's my story.
That's a great point. So thanks, Rick. So if you want to put your contact information in the chat, then
Okay.
great to
Thank you very much.
to hear from you. Okay, so Patrick, do you wanna? I think we almost got everyone.
Hi, I'm a newbie. I'm trying to convert from the process of analysis to the confusion of the proliferation of the information that's exploded online, and so I'm a virgin in that respect. The only
Where do you live, Patrick?
I live in Vacaville, which is Bay Area between San Francisco and Sacramento.
Right.
And I've been in touch with some really good agents and be working with them. And I was an agent myself decades ago. And yes, there are basics that haven't changed, but the way to operate has been totally revolutionized. So I have still some learning to do there. So I'm just here. I've as I mentioned, I was just confusing myself with the online information, so I've pared it down. And Stefan, I appreciate what you do, because you're still on my top 5. So I'm not getting out of the information totally, but you've been a big help. So I appreciate that and what you do. So I'll be tagging along for a while until I get some projects going. And I'll let you know.
Yeah, and thanks, Patrick, for attending our events. And yeah, if you want to share your contact information, feel free to connect on the chat or.
Okay. Yeah, I'd like to do that. I am honing in on multifamily eventually, but I don't know that anyone would trust me, since I've never done anything but single family so far. And but I'm also interested in combining that with some social service in respect some group homes that are truly needed for my main focus there would be foster children that have aged out. And so there are programs available, but when I try to talk to them about real estate, they draw blanks. They haven't been much help. So anyone with information about an operation that is providing that service and still provides enough ROI that they can continue, that the investor can continue its successful business. I'd like that information. So yeah, I'll go ahead and put my contact information on the chat. Thanks for the idea.
Great, great. Thanks, Patrick. So I think we have like AAY. I'm not sure it's the full name is not seen. If you wanna speak up, since I see on the meeting. Okay. Okay. So I think we have a. I think we had a good meeting here today. So I'm gonna actually let me put in. I think I did it before. But let me put in my information. So just to make sure if you guys want to reach to me. So just 1 second. So so this is my information. And actually, Finance Meets Real Estate gets posted on YouTube. So we are a YouTube channel as well. So here is our YouTube information. If you guys want to subscribe, that would be great. So this is our YouTube channel. Yeah, thanks, Patrick. So this is my information as well. Okay, so yeah, if anyone wants to share anything before we close it for today, let me know. It's been great connecting here with everyone. And yeah, so any last words if anyone wants to share? No?
Thanks again for doing this and for your faithfulness and being here. Just we can count on you to have interesting topics and guests, and just thank you for what you do.
Thanks, Rick. Really appreciate having you here. I've seen you on other events in the audience, so appreciate joining us. You're joining us.
Yeah, Stefan, the only thing I got to say is that you've cut into my social life, because whenever I'm going to do something on a Tuesday night, I have to take you into account. I have to say I can do it before Stefan or after Stefan.
Appreciate you're very kind.
Maybe no private or social life before Stefan. Monday and Tuesday is knocking all of those items of the to-do list, and then as of now we're ready to go.
Exactly. It's like it's like in history, like AD, right? 2000 AD and BC. So it's like after Stefan, before Stefan.
Very great. Well, yeah, thanks everyone. It was great seeing you, and have a good night.
Have a good week all. Bye-bye.
Same here.
Thank you.
Take care, everyone. Pleasure.